Ladies and gentlemen, we are right on time. I counted down the seconds, however, forgetting the music, to go on exactly on time. Because if I'm going to be late for an entire hour, you got to be right at 9:30. Hope you guys are all doing extremely well. Welcome to the Fintech Frenzy, a little bit of a late show. And today is an episode that I've been more excited about than many of the other episodes that we've had recently. I'm stuttering over my words. I'm getting that excited. We got SoFi and Newbank as the two biggest stocks that we're going to be talking about today. What could be better than that? I think that these are maybe the two most exciting fintechs across the board. Definitely the two that I'm, allocating my money towards the heaviest right now. Whenever it comes to fintech, and today we're going to be talking about not only SoFi, because Galileo is coming into the picture, but also Nubank. They've had two big pieces of news. We'll get into that afterwards. But for now, why don't we just jump into the big piece? Garcia, good to see you, my friend. Good to see you. Tanner is hungover from last night's party. No, I had a dinner today. That's really what it was. It was a little long of a dinner, and I didn't want to cut it short. So I apologize, but you know what? Most of the people watch this in the morning after anyways, whenever it's not live. So for those people, it will have been as if nothing even happened. That was the birthday party. It was good. It was definitely good. SJ, what's up, Tanner? What's up, SJ? Good to see you, my friend. Let's jump into it. And as people are pouring in, they're just going to get immediately into the news. Galileo payment risk platform now available for the entire financial services ecosystem. Yes, once again, Galileo news jumping right in. This has been their fourth new product that they've actually released in the last 2 weeks or so, and we're going to jump through it. So Galileo is now offering the Galileo payment risk platform to the entire financial services ecosystem. The holistic fraud engine delivers real-time payment risk mitigation controls that allow any fintech or financial brand to proactively reduce fraud losses and minimize payment risks. Now, this product in general is not new to SoFi. Okay, let me make myself a little bit bigger. I know it's not a big difference, but I'm tucked here away in a little corner. I find I've even backed myself up a little bit because I go crazy with the hands and no one can see it. So you got to see the hands. The Galileo payment risk platform as a standalone solution allows companies not currently in the Galileo processing ecosystem to integrate Galileo's fraud APIs to integrate multi-channel adjustable risk assessments and controls based on a broad variety of levers available during real-time transactional decision-making, offering custom-tailored risk controls based on client risk appetite. Meaning, potentially there might be certain clients that want to have a much more strict regulations on their client, whether that's, potentially credit limits or FICOs or, velocity controls. Those are all able to be changed. Utilizing advanced data elements embedded into enhanced rules and machine learning based models, taking into account entities such as merchants, channels, geolocations, etc., and leverage network risk checks and assessments for fraud decisioning. Now, how does this all work? We're going to take a look quickly at SoFi's video here. And it's a minute long. SoFi wouldn't dare take away my monetization, would they? Let's check. I'll risk it all. Oh,
people want.
Let me turn off the music for a sec. Okay.
Want to feel secure while spending and managing their money online. But cyber criminals will use any means necessary to steal data during a transaction. So it's essential that banks, financial technology companies, and others handling online transactions use the latest tools to prevent fraud and risk. According to LexisNexis, even $1 a customer loses to fraud will lose their financial service provider 4 times that much. And that number is growing. That's time, money, productivity, reputations, and customer relationships down the drain. Modern day fraud requires modern fraud prevention and mitigation solutions, like the Galileo Payment Risk Platform. It's a real-time risk analysis and fraud detection engine designed to meet and manage the growing threat of transactional fraud. It focuses on risky transactions only in order to ensure a positive experience for your customers. Using rules, machine learning, artificial intelligence, and consortium data, the platform identifies and analyzes patterns and anomalies that may pose threats before they escalate. Leveraging over hundreds of risk indicators or features, transactions can be approved, declined, or sent for analyst review based on real-time and near real-time decision-making. And our easy-to-follow user interface lets you add just the features you need without a programmer. The Galileo Payment Risk Platform can address both existing and emerging fraud threats. In addition, our fraud and dispute management services connect you with Galileo's team of
Did anyone wait? Can I go back there for a second? Look at this guy's bling, man. Look at this freaking watch. who types on a keyboard with this big watch? Looks like a Rolex this guy's working with. Is it a Rolex? Anyway, let's finish.
Management services connect you with Galileo's team of financial fraud experts to support your risk management needs. Stay on top of existing and emerging fraud threats with the Galileo Payment Risk Platform.
Let me just see if this is an actual Rolex here. Maybe a Submariner, a gold. Let me see if I can find one. Oh my God, it might be. It might be. What kind of guy is shooting B-roll here? Is shooting B-roll with a $40,500 watch on. Here. Enhance. No, seriously, that's what I'm doing right now. Look at this. You see this? Oh, wait, I can't. Let me. I'm gonna try playing around with this for a sec. Okay. Here, does this work? No, it doesn't. No. Okay. Anyway, if you can see that triple crown here and the black bezels, and I have a zoom feature on my computer, but it doesn't work. It doesn't translate to the actual live video, unfortunately. I don't know why. But that looks heck of a lot like this right here. I think this man has a watch on that, or it's a fake. But I need to figure out what these B-roll shooters are doing. Watch is too big to be a Rolex? I don't know, man. Look at that triple crown that they had. It looks identical to that. I don't know, man. You're telling me? Like, I don't know. It looks like it, doesn't it? Anyway, okay, let's get back to it. Sorry, I'm getting sidetracked. Okay. That being said, going back to it, they also added in with real US payment data. They had a study that came out from Mortar Intelligence that's talking about how fast the actual market is growing between 2018 to 2028. Forecasted data period between 2023 to 2028. They see a compounded annual growth rate of 10.12%, right? And the big players in this are FIS, Fiserv, MasterCard, and even PayPal as well, being a large contributor in this mess. Kind of funny enough, right? That PayPal is also here, that they believe that this was also going to stand, that people are going to need this product even more. Now, I have some pretty insightful things that I want to talk about, but I want to finish this article before we jump onto this, because this reminds me so much of another product that I got very, very excited about. They said, in the fight against fraud, banks, fintechs, and program managers are consistently solving for two key challenges: minimizing fraud losses and maintaining the ability to tune anti-fraud strategies to respond to new threats and elevate the customer experience. I recently had a conversation on one of these fintech frenzies where I was talking about how PayPal is probably going to be even more needed as time goes on versus some of the smaller payment solutions because fraud is going to elevate too, right? As much as the fraud detection is getting smarter, so is the other side, the bad side, right? And there's always going to be new threats that end up coming on that they're going to need to fight against. And that's why you might need a more experienced payment provider. Hopefully, Galileo can help in that solution as well. The Galileo payment risk platform is designed to help financial brands do both by expanding and enhancing the availability of real-time fraud data and developing technology tools that can allow in-house fraud teams to get ahead of emerging fraud patterns and reduce fraud losses. As you saw in that video, it's practically a 4x multiplier whenever a customer loses $1 to whenever the financial services company actually loses that dollar. I wanted to read out this entire paragraph because I thought it was all very insightful. Oops. The Galileo payment risk platform was developed to seamlessly integrate through open AIs and employ cutting edge AI and machine learning technology to develop multi-layer authentication processes, dynamic fraud decisioning, and real-time insights. Galileo's proactive approach to fraud mitigation combines the power of industry expertise, technology, and data. The Galileo payment risk platform is designed to deliver actionable insights derived from more than 100 million unique spending patterns to improve payment fraud mitigation strategies and stop impending threats before they happen. Very, very good. Wouldn't want to expect anything less from Galileo. Now, let me talk about exactly what I'm thinking about whenever I hear this, okay? Let me go to one of the biggest companies that I have in my portfolio. If anyone can make a guess on this, Shopify. Shopify recently put out this product called Shopify Commerce Components, okay? And what it actually allows you to do is take parts of their full stack. So whenever they're talking to large enterprise clients, they've already potentially have tons of tools that they're working with, and they don't want to drop every single one of those tools so then they can work with Shopify. In fact, they might be very excited to get into something like Shop Pay or maybe some of their analytical tools or their marketplaces or practically any sort of maybe front end or back end sort of positions for admins that are actually running those e-commerce position or e-commerce stores. But the ability to sell parts of Shopify's systems really, really changed how they're getting into large enterprise. And this product, I can almost guarantee you, was developed because this is the problem that they're having at the table whenever they're actually talking with large financial institutions, right? We love what you guys are doing on the fraud side, but we can't actually take on every part that you're offering at Galileo because we have such strong, partnerships already in payments, and maybe they're offering us better pricing, or there could be components that they like in other areas. That's fine. Galileo is not going to be the best for every single solution, right? What I think is so exciting is this actually brought Shopify so much new business, and not just on a partial business side, because obviously it's going to be for a much lower cost. A bank or financial brand that's just trying to get into risk management that doesn't need every single component is going to be paying a lot less. So fine, we might be hearing from Galileo in future quarters that they're bringing on a ton of clients, but at a lower average revenue per customer. But this is the top of funnel new product that Galileo is going to see every single new client come from. Start with the risk management and work your way through the system, right? This is like email marketing on steroids. Get the customer in, and then we can actually cross-sell them, see what their needs are, see where they're failing, and then offer different components of our solution to then sell it to them, or potentially upgrade them to what Galileo fully offers in full payment processing, right? So this is getting a feel for the product to see how good Galileo is and work up from there. Absolutely beautiful. I think that this is more exciting than people are giving it credit for, because I think some people might think, okay, we're just selling a small part of our business now for much cheaper, but it's how those clients will grow over time. And I think Shopify has shown that to be a massive, massive success. And it was one of the things that they released that completely changed the way that they went after large enterprise. Okay, and I'm realizing in the quietness that I was missing out on the music that whole time. Um, Forgive my ignorance. Why aren't the big banks, JP Morgan, Bank of America, etc., offer what SoFi is offering? What prevents them? And by what SoFi is offering, what exactly do you mean? Because if you mean APY, the truth is they can't afford it. If you mean their payment solutions and these sorts of things, it's probably because they just don't want other banks to have it. They just build internally, and they're such a big customer that they don't need others. I don't think that that SoFi is necessarily trying to compete with the big APY. Yeah, so they simply just can't afford it. It sounds funny, but there's been a couple experiments, I guess, ran. One of them was from Frugal Buck. I've had him on the channel, I think, a couple of times at this point now. Where if you just look at their actual cost of funding and you increase, their amount of deposits by even 1%, a lot of the big banks even lose profitability. 2% would put them all out, right? 4.5%, you're not even talking anywhere close. Like Bank of America in their most recent earnings was talking about how their retail consumer on their APY side is starting to climb higher than what they've previously seen historically. And then, okay, you think, what is that? Well, it's 0.34%. 0.34%. SoFi's is 4.5%. It's a little bit lower whenever you actually average it out. I think it's like 3.8% whenever you match both savings and checkings. I think it's like 3.8%. But still, it's just way too high. Way, way too high. Watch is too big to be a Rolex. Yeah, maybe. Could be. Sorry, if no one knows what I'm talking about, you got to go back in the video. Watch costs more than my Corolla. Is there a reason why Newbank went up almost 7% today? Absolutely there is. Do we want to switch over to that? I did just want to mention Galileo just this October released a unified corporate credit solution, this single solution payment risk platform, the expanded buy now, pay later for small to mid-sized businesses, and then also attained a multi-market MasterCard certification whenever it comes to Latin America. All that news was from Galileo in like the past 2 weeks. Okay. Compare that to the months that we were kind of quiet on Galileo and people were kind of losing hope. And now it's like, holy, have they been working and just waiting to actually release what they've been working on. Next on SoFi news, they actually got upgraded by KBW Investment Bank from a sell rating, which was what they were before, to now a hold rating of $7.50. Now, I'll tell you why this is good news and not bad. One, they were a sell rating before. They were already in the bear category, right? So we're not taking someone who was very positive on the stock and changing their mind, but it is still an upgrade, okay? And now they think over the next 12 months, now the new low that SoFi is going to get to is $7.50. So in a way, this is even taking the bears to increase their lows, and maybe it means higher lows for SoFi going forward. It is actually a positive thing, even though the price target is still not what we want, right? But bears have to turn to holds before they turn to buys. You know what I mean? It's a slow climb. Maybe in the next few quarters they will they'll change to a buy. Okay. Let's get into some Newbank news. Stock was up, like that person said. Let me just double check. SoFi down to $7.59 in after hours. Newbank, on the other hand, up to $8.25, up from the $7.77 that it was the other day. People didn't like that $550 or 550 times price to earnings ratio. You're not going to like it as much anymore, but I do enjoy the gains. Let's talk about it. Close out all these other tabs I have. Nubank applies for a banking license in Mexico. Now, actually, something that I didn't realize is that Nubank didn't quite have a full bank license in New Mexico. In fact, they had something called a SoFiPO, a SoFiPO, which was essentially, here, wait, I have the exact definition. It's just a subsidiary that works with banks that allows them to receive deposits, receive or issue payment orders and transfers, make foreign currency purchases at the window, attain loans from banks and trusts, and a bunch of small other activities and such, which also allowed us to get into personal loans and debit and checking accounts. Okay, but what's quite exciting about this, in the fact that Nubank applied for a banking license in Mexico, doesn't mean we got one, but it means that we're going for one. Okay, I don't believe that SoFi is going to lose here because, one, okay, we'll go through a couple of things of why this is good and why this is, something that Nubank can potentially get. But Nubank, they'll be able to offer a wider range of products and benefits for the users that they have in Mexico. This would include investments, payroll portability, and higher deposit limits. This could get them into all the sorts of things that they're already into whenever it comes to Brazil. It also allows them to get into car loans, mortgages, all these things. And that's just going to take a little bit of time. They said, well, we are now able to create and launch products at a much faster pace than other competitors in Mexico. What we also need now is to ensure that we have adequate regulatory frameworks to unlock the next steps of growth in the journey in Mexico. And we believe that the banking license is the right fit for us and our long-term roadmap. Nubank operates, where is it? Nubank already operates as the leading issuer of new credit cards in this country. It also follows a very successful launch of its savings accounts and debit cards, which gained more than 1 million customers in a single month whenever they launched their public launch. 1 million customers in a month. It doubled after the first 2 weeks. So we haven't even seen how much it's grown since then. We're going to hear this upcoming quarter. They've been quite quiet on it. I've got a feeling it'll be quite exciting. But they said that they've submitted the license application. They're working through the actual process. And they believe they're going to see similar results to what they saw in Brazil. The company in Brazil has over 80 million customers, with about 60% of those customers having their primary banking relationship with Nubank. Okay. So it's also going to come with, it's not FDIC insurance. They call it IPAB insurance, but that's what they're also going to have as deposit insurance for this, much higher level than what they have now, which is going to also increase some of the higher end customers. And they also added that after only 3 years of commercial operation in New Mexico, Nu's financial indicators demonstrate its solidarity. To date, Nubank's total investment in Mexico's market exceeds $1.3 billion. Nu is already one of the largest foreign investors in Mexico, and Nubank is one of the country's best capitalized financial institutions, with capital levels around 500%, or 4 times the required amount of the SoFiPO's regulations. And under traditional banking regulations, Nubank's current capitalization rate, or ICAP, would reach close to 40%, or 4 times the regulatory requirement of 10.5%, and twice the sector's average of 19%. They would be by far the most capitalized bank in the industry. They would be potentially the fastest growing with the best technology that's possible, okay? I believe there is not a single other bank that has the technology that Newbank has, and it's the reason why they're able to develop so many new products so quickly. Like they said, in the first half of this year, they've developed and launched 24 new products for their 85 million users that they have. That's insane. It's absolutely insane, and it's allowing their average revenue per user and their customer to absolutely skyrocket. Let me go to their latest quarterly results, because obviously there's a lot of new users that potentially are in this chat right now. Whoops, I didn't buy enough. So Newbank shares. Yeah, right. I know there's a lot of people that are watching that might not even know about Newbank. And you guys are probably following because of SoFi. And SoFi is my biggest fintech holding. But you have to see Newbank. This is one of the most exciting companies on the entire market. And I'm not joking at all. This is like, I'm as serious as it comes. Okay. This is just their latest quarter. So none of this is up to date because we're about to get new, like this is excluding the last 3 months that just happened. Okay. So November 14th will be when their earnings call is. I will absolutely be showing this off. Look at their member growth ever since, what was this? They're not showing off a timeline here. I guess it would probably be 2019 or so would be around here because this is 2020, 2021. Oh, you can't even see my mouse. There's my mouse. So this is 2021. And then they actually got into New Mexico. They're usually a Brazilian company. Now they're in Colombia, which everything that they're doing in Mexico right now, they want to actually start doing in Colombia, putting out credit cards. So wait, let me see here. Yeah, this is exactly sort of their overall thing. They have credit cards, they have invest products, they have cryptocurrency stuff. They have checking accounts, 60 million checking accounts, personal loans, small to mid-sized businesses, insurance policies. They do everything. And this has led to customers doubling over the last 2 years, revenues 5.3xing, gross profits 4.5xing, and then net income recently just going positive just in the last little bit. Look at the growth rates on this. So before they were all doing, tiny bits of, negatives and everything like this. And this was worrying people because they were going, oh, another one of these unprofitable fintechs, right? Can never get out from under. And then they broke $7.8 million worth of revenue. Now I was like, okay, well, you're making it known. And then 58 million, people were like, whoa, and the stock shot up. And then they did $141 million. Holy, 224 million. Just, it is explosive growth. And in fact, there was just an article that came out today that I was reading about where they were talking about their, like in every aspect that you can take a look at Newbank, their activity rates on their customers are rising. The speed at which customers log on and eventually make it their primary banking relationship is at its fastest rate. People get about 3 to 4 products per user very, very quickly compared to recent quarters. It's only getting better over time. And then monthly average revenue, we'll take a look at this as well. Average revenue per active customer has recently been climbing. And at one point, this was $3.40. It's only been climbing over time to $9.30. And they believe by 2028, this will be about $23 per user. $23 per user, while also probably having like over 100 million users in no time, right? Remember, this company is only 10 years old. They just started. This is why I love fintech. Because you don't need new branches. You don't need a bunch of new financial advisors. You need programmers and you need cloud space, right? You need cloud services in order for you to scale quickly. And that's very cheap. That is very, very cheap. Purchase volumes are climbing, purchase volumes per customer as they go over time. People spend more and more with Newbank. Their lending portfolio, both on credit cards and personal loans, is climbing. It's all quite exciting. Their loss rates are lower than what traditional banks are having. So unlike what you're seeing at SoFi, where they're growing but also like struggling a little bit to find return on equity or default rates might be a little bit worse than traditional banks. That's not the case at Newbank. Their default rates are lower and the return on equities are higher. They're freaking stunning. Look at this. Look at their net interest margin. 18.3% on their interest earning portfolio. 18.3%. A year ago is 9.7%. Is anyone getting this? Tanner, you turned me on to New earlier this year, and I was fortunate enough to pick up 2,105 shares, very specific, in the mid fours. Wish I bought more. Yeah, everyone will be thinking that. Everyone will be thinking that. It's scary to buy a bank in Latin America. Absolutely. Absolutely. But that's why we're able to get this stock at such a premium. But look at who is willing to take the bet on if Newbank is going to win. You should have seen whenever they went public just like 2 years ago, who was on those on those cap tables. Like it was freaking Berkshire Hathaway, Bailey Gifford, a JP Morgan, Morgan Stanley, like every single large institutional investor was at that table to get shares of this insanely fast-growing company. If I'm talking about a fast-growing company like this with a PE ratio of 550 and Warren Buffett bought it at about 4 or 5 times the valuation that I purchased it at originally, 4 to 5 times. Guys, just even think about that sentence. That's blowing me away right now. That Warren Buffett was willing to take a bet on this company, a $40 billion valuation in July of 2021. Okay. We're in October of 2023. The company is less than $40 billion still. And the amount of customers has more than doubled. The revenue is 5.3x. We're an absolute, he wasn't even profitable whenever he bought it. You know what I mean? So, yeah. You don't have to, no one has to agree with me in this bet. And I am taking risks by putting some money into Latin America. But whenever you see like this is beyond a unicorn, this is like a decacorn. Like this is crazy. These companies come around once in a blue moon. Like this company follows the growth rate of only one other company in all of Latin America, and that's Mercado Libre, and that's also in my portfolio. I love growth. I can't help it. Cost to serve clients. I mean, what can we ask for? It's the exact same. By the way, this company, if you want to, if I could go just a little bit further. Okay, guys, I understand. It's an insanely fast growing company. I know what you're saying. There are going to be hidden issues within the stock and potentially ones that retail investors don't always catch. Expenses, just in general, a lot of operating costs. And yes, their R&D is very expensive. The technology expenses is true. But I mean, we're already massively net profitable now and only going to continue over time. Let me just take the dark mode off my Excel spreadsheet here. I don't think I can call it Excel, actually. It's definitely a Google Sheet. Let's take a look at something like headcount. Okay, so with all this massive growth, why are employee counts dropping? But yeah, what's this red bar here that I'm tracking? Can I grab it? Why can't I grab the red bar? Revenue per employee. So back before, it was about $57,000 US. Today, oh, it's not letting me grab it. I'll just go looking for it. Where is it? Where are you? I'm gonna find you. And then I'm gonna get to the most exciting part. Anyway, I don't know where it is. Oh, it's up here. Revenue per employee is now at $245,000 per employee. Before that was sitting at 57,000, or even 74,000 just 2 years ago. 74,000 to $245,000 per employee. That is leading to bottom line. Quite exciting. Let me put that back. Let me take a look at stock-based compensation, the killer of fast growth stocks. Palantir, Snowflake, SoFi even suffer from this metric, and it leads to a lot of bad articles. Not only in absolute terms, ever since they've been a public company, has this kind of been on a downward trend, but also as a percentage of revenue, it's 3.56% last quarter. That is absolutely fine. That is absolutely fine. Especially for a fast-growing company like this, like you're that's better than PayPal's, and they're a multi-decade-long company with way more staff and everything like this. I don't know, crazy. Customer acquisition cost is the absolute bread and butter of Newbank. If no one knows about this either, they acquire a customer cheaper. Oh wait, is this all messed up? Oh, the chart is not made well. Let me just go into the numbers. The charts are kind of weird because if you ever make a new line in your spreadsheet, then the charts will only follow the number. Like it'll follow 68 or 69 or whatever. If, for example, you push down the chart and you want to put something like up here, it'll completely ruin all your charts on Google Sheets. It's the biggest complaint I have about this software. Customer acquisition cost, $4, $5.95, near $5, $6, $7, $12, $4, $7. You get it. SoFi's, if anyone doesn't know off the top of their head, it's like $380 2 quarters ago, or near $300 per customer last quarter. I hope it continues to come down. But this is like on a whole nother level. In fact, they have some of the lowest customer acquisition costs in the entire world. About half the customer acquisition costs that Block has. And that's like the main selling point that bulls want to say, is that they have a low customer acquisition cost, which leads to an LTV to CAC ratio, lifetime value to customer acquisition cost ratio, that is seen some of the highest versus any other fintech. That's what Block has to offer. Compare that to Nubank's, and you're like it's not even in the same league. You're talking like a good SaaS business might have an LTV to CAC of like 3 to 5 times. Nubank's is like 400 or 500 times. It's unbelievable. Tanner, do you have a bigger position in New or PayPal? Nubank. It's like, legitimately though, those are my 3 biggest positions whenever it comes to fintech. Is like SoFi, Newbank, and then PayPal, and then Block I think is still my 4th. Who is New's main competitor? I'd say Mercado Libre. A lot of the traditional banks too, like you're going straight up against the big players in Brazil, like Banco do Brasil and Itaú and all these ones. Like these are they're like the JP Morgans and Bank of Americas here, right? The problem is that they don't offer nearly as good of solutions. There was someone in my chat the other day that says they're getting 9% APY in their Brazilian account, like similarly to how we get in SoFi, because their interest rates are so much higher in Brazil that they can offer very high APYs there. And it seems ridiculous, but it's a very profitable company. So yeah, all the numbers are just quite elevated. And the funniest thing is that there's a lot of products in Nubank that I find, in Brazil, that just quite haven't been modernized as much. So like Nubank, for example, does have overdraft fees, right? SoFi, a lot of the newer banks kind of try to cut that out because they need to find better ways to stay more advantaged, which kind of leads to a better experience for the consumer. And for the most part, Nubank does offer that, but there's some other places where it's like, well, we kind of don't need to yet because the competition isn't even anywhere close. So, we can kind of increase our profitability in the short term. What is that, Kier? Is that how I say that? Thank you for the donation, my friend. What is Nubank's strategy for mitigating the risk tied to extending credit and personal loans in areas with significant unbanked populations? So Nubank created this design. They created the design in this industry. The company's made up from a bunch of like tech people and Capital One people. And so what they did was they did exactly what Capital One did. They went to the high majority of unbanked population and said, hey, we'll give you guys a credit card, but we'll give it to you for like the equivalent, like 200 pesos, or sorry, 200 real, like $40, right? Go spend that and let's see if you pay it back. And so there's a lot of clients that in their first month have large default rates because they have no want to pay them back. But then the customers that do actually end up sticking with Newbank, well, we continue to increase their credit limits. And then, you know what? We also, Newbank, also has created designs where now whenever they go after these clients, they can continue to offer that and then potentially even get like a new account, which is their checking and savings accounts, and then actually see how their transaction history is being used and then make better decisions off of their off of their debit card spend to then offer them credit solutions. Personal loans, they're quite new into. In fact, they actually stopped it. There was this whole issue with Stone Co. and Newbank, quite the same. That was about 2 years ago, roughly, where they were in a little bit of hot water with their personal loans, but it wasn't the large majority of their business. It was the credit cards that were doing all the sort of heavy lifting. And so they just slowed down on their personal loans. And now they feel like it's safe to ramp back up because they have some of the smartest, AI and machine learning algorithms that they can take, sizable bets on their customers, knowing how much money they make, knowing what they're spending, what do you call it? Like just the transaction history. I don't know how to spending habits. That's what I was trying to say. And so what's so funny, and in fact, I actually have some more Newbank news on the experience with credit and AI. In fact, they dropped this yesterday. I'll read this out too. Was sound breaking? Is that for everyone? That was probably just me stuttering, by the way. I was doing lots of stuttering. But it's just like any bank where they're not going and offering personal loans to people that have no like unbanked experience at all. We're not going and giving $10,000 to some person we don't know, right? They make a good relationship with that client, build up the trust with that client, and then continue to offer credit limits as that sort of history goes on. It's the exact same. It's just in a different marketplace. And in fact, that high unbanked population in Brazil, if you actually look in the past, like many, many years, has been dropping pretty steadily. And it's almost single-handedly due to Nubank. And now we're going into a population in Mexico that has an even higher unbanked population. And I think Nubank will do the exact same thing. One of the things that I also like about Nubank is like, you're changing like kind of the trajectory of entire countries, like lowering the fees for everyone across the board. They just released this new program where they were talking about saved fees that they did, and I forget what it was, for the first month or something. They saved $800,000 for Colombians, just based on the fee schedules going from traditional banks to I don't know why on my mouse, this is my back and forth button right here. So whenever I go to grab my mouse, I hit the back button and it just sends me out of the software. So stupid. I'm going to have to change that. That being said, where was I? Yeah, seriously, where did I just go? But yeah, so extremely fast growing company. It seems like for the longest time, traditional banks in the area had been offering solutions that were, pretty much what JP Morgan and Bank of America are offering. Like, hey, you know what? We can offer you some bank solutions, but it's going to have high fees, and we're going to really only service the really high net worth clients because we don't need you. That's not you're not part of the the money. Like, it's private wealth that we want to sort of capture. And also with branches, like Brazil's a very big place, and there's a lot of like a ton of rural population, and so it's very hard for people to travel, a long distance just to get to their branch banking because there's no maybe mobile solution. And if there is, it's very clunky and cheap, and they just never needed to sort of upgrade. And so they're taking a very tech heavy approach to this and going, how can us as engineers solve this banking problem? And that's exactly what they're doing. Going into this piece of news right here. Nubank begins testing with generative artificial intelligence to enhance customer experience with credit. Jeez, I butchered that one, eh? Essentially, what they said is that they're saying they're using artificial intelligence right now. Where is it? As a virtual assistant to further enhance customer service. And that, honestly, I'm just going to drop this. I'm going to go to my notes. I always find that easier. AI solution will focus on presenting personalized possibilities related to credit granting within the Newbank ecosystem and portfolio. This includes understanding the use of credit limits on the card, exploring possibility of collateralized credit, or using NewPay, which is their payment solution that also comes along with their bank app, without consuming credit limits. They can do that with Pix, which is Brazil's almost like Fed now. It's a new payment rail, and the growth in that has been insane, and Newbank has been one of the largest contributors. And even in personal loans, depending on the consumer's customer profile and eligibility, they'll be able to offer more personalized recommendations. The first version was developed using ChatGPT, as well as other data models and proprietary structures and insight tools from Newbank themselves. Proprietary structure and insight tools makes me think that this is exactly how SoFi is going to see their advantage whenever it comes to SoFi Relay. Who's going to have as much data on you as you not only having a banking relationship with SoFi, but also adding all your external accounts and everything to just track it all. And it's one of the fastest adopted products that SoFi has. Okay, last thing that I'm going to read on this, because this is quite exciting. Yeah, disable the buttons. Seriously, the back buttons, yeah. Okay, the strategy is part of Nubank's goal to establish a new service paradigm for its customers. Simplify and optimize resources through artificial intelligence and cutting-edge technology ecosystem focused on offering an even better experience through automation and personalization. Boom. That is where not just in banking, that's where every single company is going to go. I feel like with AI, it's going to step up everything. I think it's going to have a ton of savings whenever it comes to a cost for headcount. There's just not going to be these massive call centers that are going to need to take all these customer calls because AI is going to figure out a lot of those solutions. I think this is going to be extremely exciting next 10 years or so with the development of AI. That being said, I haven't spoken about this like Newbank like this in a very long time. And it's good to remind myself of all the growth aspects that I remember with Newbank. Because without new information that comes out from Newbank, you're not always going through the numbers and being yeah, how much revenue did they have and how much growth did they have? I always like to remind myself, and it's definitely been a fun episode because knowing that they're going to sort of follow the playbook that they saw in Brazil, now that they can actually get into investment products and they're in personal loans, but all these other sorts of products that they have over in Brazil now being translated over into Mexico, might see that same growth curve offering to business accounts, investments, mortgages, auto loans, everything. Very, very exciting. For you, what level of growth is too low that you would need to put more consideration into ROE metrics and focus on capital efficiency, or would you move on by then? I think that's a 100% case-by-case basis. It's really hard to put a single level of growth before I'm you know what? Capital efficiency is where we need to focus. I think maybe that's also what people are focusing on with PayPal now, right? Specifically, right? Is how long can we stretch out, because their growth is pretty slow, but we also think that operating metrics are going to get better. Their operating margin is getting better. New just grows like mad in every way. Yeah. Yeah, it's like one of those, what's that graph where the I'm gonna butcher that. Almost like a skill tree. They're just being blown out in every proportion. They're seeing lower cost to serve, higher average revenue per user. Net interest margins are going up. Like in every way, it's just expanding this massive balloon of a company, and people are like, "That's an expensive stack." It's like, what do you want? What do you want? Like, you want JP Morgan level margins on that? You want Citigroup level margins on this company that has gotten 85 million users in less than 10 years? You're out of your mind. Like, you have to pay a level of higher premium whenever you're getting the fastest growing fintech that's public on markets right now. Yeah, it's a $40 billion stock. I believe it'll be a $200 billion stock. And people are going, oh, I mean, come on. There's massive banks that don't see that premium. It's like, yeah, Tesla's a car company that had $1 trillion valuation. Why is that impossible to see if we can find a Tesla level financial institution that is doing things that no other company is seeming to do in multiple geographies, has aspirations to not only dominate Latin America, but literally spoken out saying, we want to go to Africa. We want to go north into America and go after the Hispanic populations in North America that are being greatly underserved. And not just North America, obviously, I'm aware where Mexico is. But yeah, like it's just very exciting. What metric made you buy Newbank? It's not one metric. There's not a metric. Like we also have to remember that the price that I first started buying at was like $3 per share, and the stock had been pulled back so strongly, and I was trying to find out what had happened. And even now, the stock is being priced down. So I'll talk about some bad news for the company. Although their biggest product right now is their checking and savings and their debit card products, the large majority of their money comes from their credit card products. And then obviously, if, for example, you have a credit card company, swipe fees are a large percentage of your business. And so that is being debated right now in Brazil is, do we need to bring down credit card limits? How much interest can be charged on credit card balances? And then also, how much are the swipe fees that we could actually charge? And to be fair to Nubank as well, these debates have been in place for like the last 10 years. But supposedly they're heating up right now. I don't even believe it. But even if it is the case, I don't think this will slow down. I mean, it might slow down New, but it's not even going to put them nearly where people think. Like some people think, oh, well, there's going to be a bad thing that happens to a company, and so they're not worth anything. It's like SoFi had their student loans taken away and they pivoted to personal loans. What's the case that Nubank can't pivot to investments, insurances, and all these things? I think the main part that people are really underselling is the fact that they get a customer. That's actually probably one of the biggest metrics that I looked at whenever buying Newbank, is that they had the lowest, the most exciting customer acquisition cost, and average revenue per user was skyrocketing. That combination, you don't see anywhere. And if you do, it's like the unicorn of unicorns, like Snowflake, and then you have 40% stock-based compensation as a percentage of revenue, and the share and the founders are not working for you, they're working for their team, and you're the commodity. That's a big problem with investing sometimes. We recently just did a stock tank episode, and I don't want to spoil it, but I felt like the company was working for the insiders and using the investors' capital to fund their own dreams, and it wasn't to return capital to shareholders. That's just the way I felt. That I don't feel at all from Nubank. Like, this feels like a professional team, as if, David Valiz, the CEO, has an investment banking background. Like, he He knows return shareholder capital and you'll be one of the richest men in Brazil, and he almost is. So yeah. Are you nervous that Newbank is valued like a tech company? They are a tech company. They are a tech company. PE currently over 800, and it'll be under 200 next quarter. Like, no, I'm not. In 4 more quarters, they'll have a brand new PE ratio. And if they don't, if it continues to hold up a high valuation, then the stock will have ran completely because the growth is not going to slow. I'll be very interested to see how profitable New can become. They have a unique opportunity to dominate their market with insane net income margins. Yeah, it's nuts. What market cap do you think New will become in 10 years? I mean, SJ, it's really hard to know. I think the hardest thing that it'd be silly for me to even put a projection on it because like I really don't know is how will Newbank be accepted in new geographies that they're not right now? They've gotten adopted by Brazil. I believe like 80+% of people are going to have a Newbank relationship. Mexico has been growing faster than Brazil for sure, did whenever they originally got started. But it's still like I'm starting to see signs where you're like they kind of slowed down in credit cards in the last quarter or so, and I'm like, ugh, like why isn't that growth continuing? You know what I mean? And there's probably other things at play. Interest rates are rising, so like it might be a harder product as well. But yeah, like I don't know. If they can absolutely replicate this, localization is something that's extremely hard to replicate. And whenever you know a market completely, it's very easy to dominate your market. Well, not very easy. I mean, obviously talented people with lots of hard work, but I think it's very hard to make a global company. And I love that they have aspirations to do that, but it doesn't mean that they'll be successful. Seeing strong growth in Mexico and Colombia would boost confidence, as it signifies a broader diversification beyond Brazil for Newbank. I wish I could quote that. I wish I could take that from you. But no, that's absolutely true. If they can dominate another market, then they understand what they have to do. So far, it's early days. And by early days, I still mean they are the leading credit card provider in both Mexico and Colombia. They are the number one in both of those regions already, while being in Colombia for like, what, 2 years? like it's a brand new market for them. They sell more credit cards than the big banks there. Hello from Oakville. We're close. We're close, my friend. I got some SoFi in the $7 yesterday based on your get in the 7 suggestion. I'm not suggesting you do that. I'm suggesting I do that. Cool. Only issue for New is credit exposure at the moment, as far as I can tell. I mean, they're a credit company. It's good. Like they're gonna have the same risk that any bank would. But yeah. And what I love about David so much is he even brought up Amazon. He was like, I know that we're very profitable right now, but we might not always be profitable all the way into the future. We're just benefiting from insane net interest margins right now because of interest rates. But he's also like, we are going to focus on growth, not for every quarter, not even for every year. We're focused on 20-year growth. And that's what I love to see. And that's probably what got Newbank to this point in time to begin with. It's that Amazon, Jeff Bezos level approach of like, no, we need to be the biggest. And if Newbank goes global, I absolutely seeing them being like one of the biggest financial institutions in the entire world. Some of the comments, Like, what are you even asking? Do you think the arm in Ibstacar? That's the end of the sentence. Oh, arm and Instacart will make an impact on revenue. No one talks about it. Are you talking about for Newbank or for SoFi? If you're talking about SoFi, yes, but negligible. What are your thoughts on SoFi's Q3 earnings? That's not for today. That's not for today. What's the difference between New and StoneCo? StoneCo is more like Block. They offer e-commerce payment solutions, while also offering a fintech-like solution for payments. And in fact, they just recently launched this new app that has seen quite significant growth, which is quite interesting. I need to look more into it. But it's like, what's the difference between Block and SoFi, for example? There's lots of different things. Obviously, one offers a half-baked solution for banking, Cash App, versus a all-in-one everything solution for banking that SoFi has. Well, Newbank is that same thing. All-in-one everything, banking licenses, all the whole mix. StoneCo, sort of half bank, finding customers, but kind of doing a little bit of patchwork on the tech side from what I hear as well. Newbank is all built in-house. Everything is designed to perfection from what I hear. It's quite exciting. Having credit exposure is fine, but as you know, not all debt defaults at the same time. Diversifying exposure would help, in my opinion. Yeah, no, I think so. And I think them getting deeper into personal loans and even geographical loans will definitely diversify them. And we have to think back to where Newbank was 2 years ago. Like 2 years ago, they were a credit card company for the most part, or maybe 3 years ago. I have to go back a little bit further, but diversifying like their investment product is one of their fastest growing products. People are buying new sorts of GICs. It's not GICs for them, or it's not even GICs for you guys. It's CDs. Sorry, certificate of deposits. I got to remember, I'm talking to Americans here. They have CD offerings now. They have stock purchases. They've got bonds. They've got all these things that will also help grow their investment products. And it's just a matter of time that will help diversify that. Are you planning on doing a live on Shopify? I like to sprinkle in a little bit of Shopify. I've done conversations where I do Shopify single-handedly and they just get no views. Like actively, I'll look, like I have a little indicator right here that shows me who's watching, and it just drops off a cliff. It actually just ticked up for me, but I'm sure that won't stay long because we're on Shopify right now. But yeah, I mean, I took a 30-minute show and turned it into an hour for a 9:30 show. Ladies and gentlemen, I want to say a couple of things. I love YouTube. I love you guys. I love the community we're fostering. I love seeing all these names that I continue to see that build, a community over time. This is like the greatest, I don't know, so much fun. If I'm clicking on your name, I see your names all the time. I think I see this name. Daniel Franco. I don't know if I see your name actually. The reason why I was talking about that, sorry, is this new project that I'm working on for the SoFi all-in-one video. If you guys don't know what I'm talking about, I'm creating every piece of SoFi's investment. I'm doing a deep dive on, and potentially maybe we'll even do that with Newbank or PayPal's probably next. It's going to take me like a real while to do this, like probably another month. Putting about an hour or so every single day into it, or two. And I'm just really excited. I feel like the more effort I'm trying to put into this, like I want to create the best product for you guys, because I don't know, it comes back to me in a happier audience, and obviously more views that helps grow the community and everything like this. And it's just this amazing cycle that we've been able to foster here on this channel. And I hope you guys like the FinTech Frenzies. It's hard with full-time work to get away from that to do extra videos. And I'm trying, like, we're adding on SoFi Weekly After Hours, and we're doing the Stock Tank now and the FinTech Frenzy and everything like this. And all I've ever wanted to do my whole life was talk about stocks. It's my favorite. And I would even like to get away from fintech. As you guys know, some of my biggest positions in my portfolio are Nvidia, Shopify, Tesla, Airbnb, friggin' Salesforce, right? All of these positions I would love to talk about, and they lose views whenever I do talk about them. Or there's already so much information on something like a Tesla that it's like I would just do a disservice to the community versus what half the people are already doing. So I find fintech's not being talked about. I type in fintech, it gets no views. I type in fintech and I get no results. It's an area that I think that I can add to. Joshua, I thought I brought your name up. I think you were literally the first name. Go back. You're like the first name I clicked on. I absolutely clicked on your name. You have been, just so everyone's aware, I think out of everyone in this list, Joshua, Lost in BKK has been here a long time too, but Joshua has definitely been around a very long time. Longer than Doug even, and Doug's been here a long time. Actually, you know what? Michael James Regan has been here a long time too. Stephen the Mountain's been here a long time. Mark LeBlanc's been here a long time. Garcia's been here. Yeah, dude, I love this, dude. It's the best, like, seeing all these people. And, like, I mean, hopefully one day we'll actually get to meet, like, maybe in some sort of, that's what I was hoping Vegas was going to be. And so, like, whenever we were talking about going to Las Vegas, it was exciting for me. And then it was like, oh no, it's just going to be like the 10 of us. And I'm like, no, I'd love to meet you guys, but like, I'm not spending thousands and thousands of dollars to go have a bro session. I want to meet some people. Like, I want to meet the community, like everyone. Spend like $4,000 to go see 10 people. That sounds rude. I mean, like, I don't know. Just preferred $4,000 in SoFi or camera equipment or lighting, or come to Banff. Maybe one day. I want to see it. I've never been. Do you like M-Phase? I hold M-Phase, really worried about them. But yeah, no, a very small position. A news story: SoFi Stadium will not host FIFA World Cup since owner does not want them to pay to make field regulation. Yeah, I heard about this. Well, I didn't hear about the all that extra information that you gave me, but I heard that FIFA will not be hosted in the SoFi Stadium. If I could only buy one stock, well, I mean, luckily enough, I don't have to only buy one stock, but if I could only buy one stock for the rest of my life, it would be Shopify. Be Shopify or Tesla, probably. Or, I mean, Nvidia would be up there too. I just probably wouldn't want all, like, the stock for the rest of my life to be purchased at this valuation. But where I had originally purchased that stock from, I'd want that. But I could put all my money into Shopify at this valuation. For the rest of my life, I mean. Come to Montreal. I'd rather go to Banff. What's the sightseeing? I speak no French. SoFi Weekly next week? SoFi Weekly every week. Okay, guys, I just wanted to sum up that I love you all because I got to go. But, and that hopefully that this new product that I put out, the SoFi Weekly, or the SoFi everything analysis product will kind of change the way that I look at content creation. I think longer term projects will be very, very fun. But that, like, I've never considered myself good at this. But I'll always continue to try new things and try to figure it out. But fun. All right. This has been way, way too long. I'm going to go see my girlfriend. I love you guys, but I love her more. See you later. Bye now. Okay, goodbye. Leave. Go. Peace. Ah.